It's Monday the 21st. I'm Jason Sen. Let's have a look at Forex trends and come up with some trade ideas for you in some of the dollar pairs. So the first pair I've got on the screen today is the New Zealand dollar versus the US dollar. We've certainly been in the bear trend on my 4-hour chart. Nice steady downtrend. Got the trend lines on there already. I'm just going to take that one off. Could probably put a shorter term trend line on somewhere like this. That might work. Okay, so looks like we're consolidating on the downside for the last few days. No indication really that we're going to turn around and go up. No buy signal for me anyway. But we are pretty oversold after this move to the downside. We're oversold on the daily chart quite significantly. Then we've got a little bit of resistance just from the 50-period moving average on the 4-hour chart and the 23.6% fib that I've got here at 59.77. We'd have to get through my little trend line here in order to do that. But the trend line's only 10 days old, so it's not that significant. The big resistance for me would be at the 60-20, 60-25 area. We have got a trend line coming in there. We will have the 100 period moving average there before too long because it is declining at quite a rapid rate, currently at 60.48. So if we were to bounce that far, and I'm not ruling it out, I would not suggest a long position. That would be too much of a gamble. But I would be happy to sit back and see if we manage to hit that resistance level where I would attempt a short position. Same goes for the Aussie versus the US dollar. In a nice clear bear trend, very oversold on the daily chart again. So it's possible that we could either consolidate or have a bounce. We could just stick in a range from where we are. What's that low? 63, 63 up to 64.88. A reasonable expectation for us to consolidate in that range before the next move to the downside. We'll see what pattern forms. Maybe we'll get a flag, pennant, triangle, something like that. For now, I've got resistance around 64.80, 64.90 area. That's from the trend line that I've got on there, the 23.6% fib. Swing low down here also reinforces that's probably a good level. Sooner rather than later, the 100 period moving average will be down there, lending weight to that area by the time we recover to meet it. If indeed we do recover, I do think we probably will. But again, I'm not going to attempt a long position in a bear trend. It's too risky. I'm going to sit back and wait to see if we bounce to my sell level. Cable, the pound versus the US dollar in a descending triangle. Could I argue that that's a double bottom? I kind of could, I guess, but I'm not convinced. And we'd really have to be breaking above 128.20 for this to complete anyway. So I'm not taking that into account at the moment. I'm focused on the descending triangle within a resistance area right now, as you can see. Now, there is something far more interesting to show you in cable. We're looking at September of last year up to the present time on the daily chart. So it's nearly a year old, this set of data here. And you can see we've been in a real nice bull trend. I put my Fibonacci levels on there, which I can't live without. As you know, the 100-day moving average has been a good support level down there. We bounce right off it. You can see on the daily chart the same candles with the long lower wicks. So that's quite positive. You can see strong buying came in at the low of the day on the 3rd of August and again on the 14th of August. Aggressive buying came in, leaving that long lower wick. I could argue that it's a potential double bottom. To get the confirmation, we need to be breaking above 128.20. What is exciting for me, the left shoulder, the long head, and the potential right shoulder. We could really get up to 128.77, the 50% fib, and even 129.40, the 61.8% fib, and still the head and shoulders pattern would be relevant. We would have to break below the neckline for this head and shoulders pattern to be completed and for our sell signal to be confirmed. We are still 150 pips away from it. We've got a lot of work to do before that completes, if it's going to complete, but I wanted to bring your attention to it because it's a really nice pattern. And if it does complete, we are looking at a potential drop of, I'm going to say 500 pips from 126.00, which will take us down to 121.00. It means we would have to break the 500 green and 200 red moving averages for us to drop down to around the 38.2% fib, which is at 120.90. So that would be a reasonable target. If the pattern plays out, I will be watching that over the next few weeks. I was only going to cover the Forex markets, but I really want to show you this. This is the E-mini S&P. We've had a really significant decline or various worries hitting the stock markets, interest rates staying higher for longer, the problem in the Chinese economy. We have hit a good support level of the E-mini S&P around the 43.70, 43.60 area. We've got a confluence of Fibonacci levels there. We've got the previous swing low from June, the 500 period moving average on the 4-hour chart. And it does look like we've bounced off that already. I had this as a buy level for my subscribers on Friday, and we're already into a long position down at that level. I would wonder if we're going to build an inverse head and shoulders pattern. I bet if I look at a short-term chart, 30 minutes, let's have a look. This could be some sort of left shoulder, head, right shoulder. If I put a trend line on here, this is a 30-minute chart. I guess I could argue that maybe that is an inverse head and shoulders pattern. So if we start to break above 43.90, that would confirm that pattern has been completed for a move up to 44.10, 44.20. Going back to my 4-hour chart, you can see that we have bounced nicely, and I wouldn't be surprised at all to see the index up to 44.35, 44.40. I probably will be looking to sell into the rally because I do think longer term we could be headed down. The market could have reversed. And again, we could have another head and shoulders pattern here. Look, this could be something of a left shoulder. This could be a head. And then we could start to build a right shoulder as long as we stay below what looks like stronger resistance around the 45.00, 45.20 area. Something that I'm going to have to watch over the next few weeks. This is not going to form quickly, but it would be interesting to see a head and shoulders pattern here and then a break below 43.60 in the future before the end of the year to finish off the pattern and then trigger significant declines into next year. That's just something I'm going to be watching. Hope the video is useful. Now, if you want to subscribe, I've actually got a Patreon page set up now. I'm going to put a link in the description box. Have a look and you can get my signals every morning delivered to you on the Patreon page. Or if you subscribe as a Patreon, I can even put you in my Telegram group so you get all the updates during the day. Please help me with a like, a share and a subscribe. Thank you.